GST is a value-added tax that is levied on the supply of goods and services in India. It is a comprehensive indirect tax that has replaced several indirect taxes, such as excise duty, service tax, and value-added tax, among others. GST was implemented in India on July 1, 2017. Here are some important points to keep in mind about GST. GST has three components: CGST, Central Goods and Services Tax; SGST, State Goods and Services Tax; and IGST, Integrated Goods and Services Tax. GST rates vary depending on the type of goods or services being supplied, with four broad tax slabs: 5%, 12%, 18%, and 28%. GST registration is mandatory for businesses with an annual turnover of more than Rs. 40 lakhs, or 10 lakh rupees for certain states. GST returns must be filed regularly, either monthly or quarterly, depending on the type of business and turnover. Businesses can claim input tax credit on the GST paid on their purchases, which can be used to reduce their GST liability. GST compliance is crucial for businesses, as non-compliance can lead to penalties and legal issues. GST laws and regulations are regularly updated, and it's important to stay informed and up to date with any changes. There are several online portals and software tools available that can help businesses manage their GST compliance, such as GSTN, Goods and Services Tax Network, Portal, Clear Tax, and Tally. However, it's important to ensure that these tools are reliable and comply with the latest GST laws and regulations. GST liable. Under GST laws in India, the liability to pay GST lies with the supplier of goods or services. However, there are certain cases where the liability may be shifted to the recipient of the goods or services. Here are some key points to keep in mind regarding GST liability. Supplier liability. The supplier of goods or services is primarily liable to pay GST on the supplies made by them. They are responsible for collecting the GST from the recipient and depositing it with the government. Recipient liability. In some cases, the liability to pay GST may be shifted to the recipient of goods or services. This is known as reverse charge mechanism and is applicable in cases where the supplier is an unregistered person or is not liable to pay GST. Importer liability. Importers are also liable to pay GST on the goods imported into India. They are required to pay the IGST, Integrated Goods and Services Tax, at the time of import, which is equivalent to the sum of CGST and SGST. E-commerce operator liability. E-commerce operators are also liable to pay GST on the supplies made through their platform. They are required to collect the GST from the suppliers and deposit it with the government. Voluntary registration. A person who is not liable to register under GST laws may also choose to register voluntarily. In such cases, they become liable to pay GST on their supplies. It's important for businesses to ensure that they comply with the GST laws and regulations and file their returns on time. Non-compliance with the GST laws can result in penalties and legal issues.